government treasury bill sale fell short of its target by 20% as uncertainty over the domestic debt exchange program continues. Now, according to auction results, the government mobilized 1.93 billion cedis as against a target of 2.41 billion cedis. There is more in this report.
The undersubscription of the treasury bills is in sharp contrast to the 52% oversubscription recorded the previous week. The 91-day treasury bill was the highly patronized by the investors as 1.58 billion cedis was secured from the sale of the short-term instrument. Despite the maturity period being shorter than the 182-day and 364-day treasury bills, the interest rate of the free financial instrument were virtually unchanged at 35%. The rate on the 182-day and 364-day, however, fell marginally, whilst the one-year bill went up slightly. Finance Minister Ken Ofori-Atta last week, in an exclusive interview with Joy Business, said it will be suicidal if treasury bills is included in the debt exchange program because it is currently the only source of borrowing for government. Despite his pronouncement, the sale of the short-term securities has been mixed in recent times.
All right, so let's dwell on this furthermore. Joining us is analyst Patrick Agama with Republic Securities. Mr. Agama, grateful you could join us. Now, first and foremost, how did the treasury market fare last week?
Well, for last week, we saw that the 91-day cleared at 35.63%, gaining by 16.99 basis points, although bids that were accepted stretched to 35.97%. The 182-day cleared at 35.81, dropping slightly by 2.66 basis points, whilst the 364-day equally dropped by 35.56 basis points to close at 35.56. In all, the 91-day closed by gathering 81.9% of the total bids against 15.1% and 2.9% for the 182-day and 364-day bills.
All right, so based on the results, what is the outlook like?
Well, it looks like confidence is actually reduced heavily in the market. As these things are happening to cocoa bills and other instruments, investors are not really sure what will be the next. So investors are losing confidence in the instruments issued by government, and this is not really right for the market now. We expect the market to gain confidence. Most markets thrive on confidence. So if the confidence is not much and we are losing volumes every week, then it becomes a problem for the government and for the market.
I guess the domestic debt exchange program has a major role to play in that.
Yes, it's that a greater role. The thing is not just about what is happening. Everyone understands what is happening, but it's about how this is happening. And the poor communication, late communication is affecting the market greatly. And you know now that the finance minister clearly stated, it was just last week that he clearly stated that the treasury bills will not be affected. But the same last week, an instrument that mimics the treasury bill, the cocoa bill, had an incident, and that really affected investors' confidence in the market.
All right, Patrick Agama, grateful for your time. He is the head of trading Republic Securities, speaking to us on the market update there. And that's it for Marketplace for today. I am Pius Kujubaka. Always a pleasure serving you. For more news, you can log on to myjoyonline.com/business. Do enjoy the rest of our programs.